Hi, I'm Andy. Welcome to my channel. This is the place to be if you want to make the most from your money, whether that's making money, saving money, or just being better in terms of managing your money. Now, what I want to talk about today is actually in response to some of the comments and questions that you guys have asked me on the back of some recent videos. I talk a lot on this channel about the best bank accounts, whether that's some new sort of fintech ones like Starling and Monzo, which kind of have a very, very different banking experience, through to the benefits of switching your bank, getting a cash bonus, getting higher interest on your savings, getting cash back on your bills, all those kind of things. So I'm often there, I'm a big advocate of you making sure you have got the best bank account out there, or even bank accounts. I've got, I don't know, 14 at last count. I think it might be a bit more now. But anyway, the point is, I'm telling you to do this, and some of you are a bit worried about the impact that's going to have on your credit score. So that's what I'm going to go through today. When applying for a new bank account could have a negative impact on your credit report. Now, an important distinction there between credit score and credit report, which I'll briefly get into. It's probably another video to go into more detail. But a credit score, fundamentally, that is just for us punters. It's for consumers to see, essentially give it a quick health check on their credit report. Is there kind of anything out there that's kind of like, oh, that's not good, you need to improve this, or something's happened here that's brought it down, potentially an indicator that someone has taken something out in your name or whatever it might be. Lots of reasons why the score can go up and down, but that is just for us. The bank, when you apply for a current account, or the credit card company, or the mobile phone company, or the energy bill, or the mortgage provider, whoever it is you're applying for, they don't look at the credit score. They just look at the credit report, which the score is kind of based on. They will look at that credit report and other information that they hold themselves, or they get from other sources, okay? And that's how they will make their assessment on whether they should give you that bank account or whatever it is. But the important thing here to know is it is the credit report, the impact on your credit report, which is the important thing here. Your score can go up and down. Different people will look at it different ways. Different credit reference agencies have different scores. What's important is to know exactly what impact your credit report will have when you open these accounts. So let's get into that. First of all, there are two ways that a bank might look at your credit report when you apply for a current account. Some of them, and there aren't many of these, will do what's called a soft check. Now, a soft check is essentially just to verify you are who you say you are, potentially to pre-authorize an overdraft, something like that. But ultimately, when you do a soft check, it doesn't appear on your credit report to future people you apply to. It's the same thing that would happen if you're doing a comparison site for energy switching, or if you're looking at your own credit report. It's a soft check, okay? So they might do that, do a soft check you are who you are, and find out whether they will give you an overdraft. The vast majority of them, though, will do something called a hard check. Now, this hard search is called a hard search because it appears on your credit report as well. And it's kind of irrelevant who you're applying for in terms of these credit searches. Whether you accept successful or not, whether you accepted or rejected, it appears as an application to search your credit report. It's simply an application for credit. So this brings us on to the first reason why you might not want to open a new current account if you're worried about your credit report. And the first one of these is that hard search. Every time you apply for an account, say with most different bank accounts, that hard search appears on your credit report. Not really a massive deal. We apply for things all the time. Where you need to be more concerned is if you are making multiple applications in a short period of time. So let's say you're opening not just one current account, but 2 or 3. I spoke about this a few weeks ago in terms of getting lots of bank switching bonuses in a row. That's multiple hard searches on your credit report. You might also have your energy bill. You might be switching that, or you might be going after a credit card or whatever it might be. So it might not even be more than one bank account. That's what I'm saying. The more of these searches that are done, the more they will appear on your account. And that, rightly or wrongly, could be an indicator to someone the next time you apply for something that you are desperate for credit, that you are not someone they want to lend to. So if you have got something important coming up, then you really want to space out these applications, even maybe hold back on them completely. So for a mortgage, for example, they'll look back 6 months, maybe even a year on what you've been doing with your credit history, how you've been behaving. Again, there's lots of different indicators. It's not just about, previous applications, but it is part of it. They'll look at all of this, steer clear. Try not to change anything if you can avoid it, unless it's really, really essential. You don't want to do anything that could make them not want to give you that money for that mortgage. Probably less so for something like a credit card or a loan, but if it's an essential credit card like a balance transfer one that you've got a debt and you need to move it to 0% to try and make it cheaper, again, try not to kind of do anything that might stop them giving you that new credit card if you need it. Now, on Experian's website, they say the general rule of thumb is to have one of these hard searches every 3 months. That's kind of the most you want to do to kind of maintain a healthy credit score, and therefore underlying that healthy credit file as well. So bear that in mind. Of course, you can apply for more than that if you want to. Sometimes you have to. You're moving house, you have more than one thing going on at once, don't you? Personally, I think if you've got, this is my own personal opinion, okay, but if you have got a pretty healthy high score right up there, right near the top, and you don't have anything major coming up which is going to kind of look at your credit report in a very serious way, really sort of look at whether they should give you that credit card, that loan, that mortgage, whatever it might be, then you can make more applications. You just got to be prepared for the fact that your score will take a hit. It will drop down more than if you just made one application. So that means you can, if you want, do those multiple bank switching things to get those multiple bonuses. Just bear in mind, they will drop down, but it will recover. Okay, but you just need to be aware of that. That is one of the first things that can do that will impact your score. The next thing that will impact your credit report is if you also apply for an overdraft. Now, sometimes this is just default, de facto. When you open an account, they will give you an authorized overdraft with it. Sometimes you have to say you want it, whatever it might be. Now, again, there's making the application for the account, which appears on your credit report, as we talked about just now. But when you have an overdraft, even if you never use it, if it's just sitting there, never touching it at all, and it's not a good idea to use it because the interest rates are so high. I've got a whole other video about that you might want to check out. It still shows as available credit to you. And that's combined with, I say, any credit cards, loans, or other things you've got. That might also be a warning. Like, they've got access to a lot of different money here, little credit. What happens? We don't want to give them any more. So that is something to bear in mind. If you have an overdraft, that can obviously bring down your potentially, the chance of you getting it. There is also a kind of a flip side, another argument there as well, though, because there's one thing that helps your credit report, helps your credit score, is your credit utilization. If you can keep that relatively low, they say, I've seen different figures, but maybe around 25%, something like that. That basically means, let's say you can borrow, your total credit is £1,000, but you've only got £250 on there. Okay, I know it'd be larger figures in real times. You've got a 25% credit utilization. Now, if you have a credit card which is you're using it regularly, maybe it's a cashback credit card and you're using it quite a lot and then paying it off at the end of the month, but it could be a lot on there. Having an overdraft, you could argue, increases the amount of money you've got in total. It's a lot that's unused. So let's say you've got £1,000 in your credit card, £1,000 overdraft available to you. Well, your credit utilization, if it's £100,000 on the card, nothing on the overdraft, then your credit utilization is 50% rather than 100%. But again, that's across all the different products you've got. So it's something to bear in mind, but not necessarily a major one to consider. There's no point getting one if you're not going to use it, I don't think. Now, they're both obviously the result of hard searches on your credit report, but there's also an impact even if you have a soft check and you then move your bank. And this is specifically around switching. One of the big things that kind of really does help your credit report, help your credit score, is a kind of a long relationship with a financial provider. So for most people, that's going to be their bank account, particularly if they've been with the same bank since they were 17, 18, 19 years old and had that all that time. If you switch away from that bank, but when you open up a new account, you're ending that relationship. You're ending that history you've got, that 5, 10, 20, 30 years on your credit report. So you could, as a result, see your score dip. And again, when you apply for stuff, people might look at it and think, oh, they haven't got like any sort of stable relationships with these providers. So it's worth bearing that in mind. Now, there are a few things that kind of mitigate this. First of all, it's not just bank accounts, it's also things like credit cards. So for example, my oldest relationship on my credit file is with a credit card that I had in the late 90s. I had bank accounts before that, but I've moved them away. But I've still got a long-term relationship with at least one financial provider. So that's worth bearing in mind. It's not the only thing that kind of helps you there. And also that history is worked out over, generally it's an average length of service, I was going to say, but an average amount of time you've had with these different providers. So it might be that you've got enough other things in there that kind of don't make it sort of all of a sudden you're going from 10 years to zero because there's other things factored into it as well. You can also mitigate it by not closing that bank account when you open up a new one, because you don't have to switch every single time. You can have, as I said, multiple accounts. You can keep that old account open and just open up another one and use that for whatever it might be. That new one could be your everyday account. It could be just for cash back on your bills. It could just be for putting some savings in. It could be one just for switching. So you have that account, you open that new one, and that is the one that you then switch to get the bonuses. If that's your motivation is to get the free cash, open up an account, wait a couple of months, and switch that one, but keep your one you've had for a long time, keep it there sitting pretty, using it if you want to or not. You can also, if you are kind of more concerned about moving all your services over to a new bank, but you don't want to lose that long-term relationship, open up the new account, and rather than do a full switch, you do something called a partial switch. Now, I've got, again, a whole video about how bank switching works, which you might want to check out. The important thing to remember here, though, if you do a partial switch, although your direct debits, your standing orders, and any money you have in there is moved over, you won't get the current account switching guarantee, which does things like continuously move payments that come in later on, or does it in 7 days, or moves your salary, all that kind of stuff. So it's not as perfect, but it is a workaround that you could consider. Very quick aside here, if you're finding it useful, I'd really appreciate it if you hit that like button. Brilliant, thanks so much. Right, let's get back into it. Another quick one here. If one of those new banks that you are looking to open and move to is one of Starling or Monzo, and potentially also the same case for some of those other digital banks, you might find they don't report to all the credit reference agencies. There are 3 different credit reference agencies, and they all have their own different rules and own different things. And most of the banks, they will report your details, your information to all 3 of them, but Monzo and Starling don't. So Monzo doesn't appear on Equifax and Starling doesn't appear on Experian. They're both available on Credit Karma. Now, that's not necessarily going to be a major issue if you have another bank account somewhere else. But if it is your only bank account, it could be a problem, because when you apply for something from a lender, whoever it might be, they don't necessarily check all 3 of those credit reference agencies. They might just check one of them. And if they check the one which your Starling or Monzo account doesn't report to, doesn't have any information on, they might think you don't have a bank account. And that's bad news, because a lot of the time they require you to have a bank account. They expect you to have a bank account. So like I say, you can get around that quite easily by just keeping another bank account open on one of those, so at least it reports to all 3 of those services. It's not a reason to avoid Monzo or Starling. And I get to a reason in a second why they actually could be quite useful for you if you're worried about your credit score. And finally, the last reason why opening a new bank account could have an impact on your credit report is if you're opening a joint account. A joint account obviously is with you and another person. And when you open one of these financial products with another person, you become financially linked. So if they have a very, very bad credit report and a very, very bad credit score, that can then impact yours as well. It could bring yours down. It could make it more difficult for you to get accepted for things when you apply, because they will look at this financial connection you have with someone else. So just bear that in mind as well. It's always important when you apply for these things to have a look at each other's scores anyway. So you might want to just check there aren't any glaring kind of red flags before you do that. But ultimately, they are the main reasons why, if you do open a new current account, it could impact your credit report. And as I said, the main reasons to be aware of this is if you have something major coming up that you absolutely know is essential to you. You're remortgaging or getting your first mortgage. You're getting a balance transfer credit card. Something that is essential, that if you got rejected for that, it could have quite negative results for you. But if everything's fine and dandy and you're just opening up multiple current accounts, then go for it, just being aware that it will have an impact in the short term, but it will recover. As I say, I've opened a lot of current accounts, cashback credit cards, things like that over the years, multiple ones over the month, and my scores are all still pretty good. Yes, they'll dip for a bit, but they will recover soon after, and I've never had any problems personally. Obviously, everyone's different, but it's important you have that kind of wider picture. Now, very quickly, I want to share with you a couple of bank accounts you can apply for where there is no hard search. So, okay, still soft search, still going to have an impact as I've detailed, but no hard search, therefore it won't appear on your credit report. And in fact, how good your credit report is won't really have much of an impact. Now, the first 2 of these are those banks I mentioned, those new banks, Starling and Monzo. They conduct just a soft search, just basically to check you are who you say you are. Now, they would also use that information to give you kind of a pre-eligibility check on an overdraft, but as long as you don't accept that overdraft, then that hard search doesn't happen. So it's just a soft check. So you can apply for those and it won't have that, it won't appear on your credit report. Obviously, it could have other impacts in terms of longevity and things like that, but that's an important one to know about. Beyond that, there are bank accounts called basic bank accounts. And these are kind of ones for people if your credit report is really, really, really poor and you've either been rejected already for a bank account or think you will be. Maybe you've got county court judgments against you. Maybe you've had bankruptcy in the last few years, things like that. Then you might not be able to get any of those main accounts. You might just be looking at one of these basic bank accounts. Now, essentially, they operate just the same as any normal bank account. They are fee-free, there are no charges for them, but fundamentally, you cannot get an overdraft at all. You cannot go over zero. So they're not going to be for everyone, but again, they're designed for people who can't get the other accounts, the normal accounts, which are going to be better for most people in lots of ways. Now, there are all sorts of ones out there. Have a search, find out which one's the best ones for you. Quick idea though, which magazine recommends Nationwide, Metro and Co-op, whereas Money Saving Expert recommends Virgin Money, Barclays and Co-op once again. Again, have a look at those basic bank accounts if you think your credit report won't get you a new account. If you want to avoid, as I say, getting a hard search, look at Starling and Monzo. But otherwise, go for it. It's absolutely fine to apply for new current accounts as long as there isn't anything else happening in the long term. Now, if you found this useful, please do hit that like button. It means a huge amount to me. Basically, YouTube look at it and they go, right, this is a good video. I'll show it to more people. And it really helps me grow and help more people just like you to improve their finances. And if you want more videos yourself, you don't want to miss them, hit that subscribe button. Just where is it? Just over here. Hit that subscribe button, that little notification bell, and you won't miss any of the future videos. Until next time, cheers. And here are a couple more videos you might find interesting.